Assalamualaikum warahmatullahi wabarakatuh. Today in this video, we will discuss about MFRS 138, which is intangible asset, and also MFRS 140, which is investment property. So our group member is me, Akmal, Hafizuddin, Arif Azlan, Imran, and Jafrizal. The first topic that we will start to discuss is introduction of MFRS 138. So basically, MFRS 138 is known as intangible assets. They are identifiable as non-monetary assets that are generated over time and effort and cannot be seen, touched, or physically quantified. There are two types of intangible asset. The first is legal intangible and the second one is competitive intangibles, which both of them are identified separately on a company financial accounts. For example, of intangible assets are copyrights, patents, trademarks, license, and computer license. For MFRS 140, which is investment property. Investment property is a property held to earn rentals or for a capital appreciation or both, rather than for use in the production or supply goods or services or for administrative purpose. Besides, it cannot be sales in ordinary course of business. For example, in investment property are land held for long term and land held for currently undetermined future use. So, in this assignment, we as a group has select two listed company in Bursa Saham Malaysia, which is IGM Corporation Berhad and Sunway Berhad.
So for MFRS 140, as Akmal said earlier, we are choosing two companies which are IJM Corporation Berhad and also Sunway Berhad. For IJM Corporation Berhad has been disclosed an investment property as well as intangible asset in their annual report for the year concluded in 2021. The report covered the period time from 1st of April 2020 until 31st of May 2021. For the group financial statement is the total amount has been declared is 638 million 700 in and 18,000 ringgit Malaysia has been declared in investment property for the purpose of group's financial statement, while the others company or the other subsidiaries company has been declared of 6,921,000 ringgit Malaysia for the year ended 2021. For the subsidiary company of IGM Corporation Berhad, they are Max Harta Sdn Berhad and also Industrial Concrete Products Sdn Berhad. Next, we are going through to recognition and measurement for MFRS 140 in IGM Corporation Berhad. Um, for recognition in MFRS 140 for IGM Corporation Berhad, the IGM Corporation Berhad identified the freehold land, leasehold land, freehold buildings, and leasehold buildings as their investment property. As the rule in MFRS 140, the cost maintenance are not taken into account and no expenditure associated with the maintenance of the investment property in the notes. While for measurement, in MFRS 140 investment property, there are two measurements which are initial measurement and also subsequent measurement. For the initial measurement, all the company needs to have a cost value, need to determine a cost value. While for subsequent measurement, the corporation, the IGM corporation or any corporation have the option to choose whether to have fair value model or cost value model. For IGM corporation Berhad, they are choosing to have a cost value model. For the second company, we are choosing Sunway Berhad. For recognition, MFRS 140 investment property for Sunway Berhad is they are identified the property, plant and equipment, land held for development, and also investment properties under construction as their investment property. Same like IGM Corporation, the rule is the cost maintenance are not taken into account and no expenditure associated with the maintenance of the investment property in the notes. While for measurement, same like the IGM Corporation, because it is MFRS 140 rule, there are two measurement, which is investment measurement, initial measurement and also subsequent measurement. The initial measurement have been declared in cost value, while subsequent measurement, the corporation can choose whether to have fair value model or cost value model. For Sunway Berhad, they also using cost value model. For MFRS 140, we are going to the last, which is disclosure. For IGM Corporation Berhad, they are using cost model value. They also using the balancing line method as their depreciation. The impairment losses were declared on the annual report 2021, and IGM Corporation Berhad has been successful in generating income due to the investment property. They are using their investment property for the rental, for people renting their buildings and for the residential. For Sunway Berhad, uh, they are also using the cost model value on the beginning of investment property, because this is the rule of MFRS 140. And besides, they also using the cost model value on their subsequent measurement. Next, Sunway Berhad also using the same method for depreciation, which is balancing line method, and depreciation rate for Sunway Berhad is from 1 to 5% for their investment, for their rental and for their malls, while 13% for their education. Sunway Berhad has been successful in generating income for their rental residence, um, education, and also leisure, such as mall for their investment property.
For MFRS 138 Intangible Asset, IGM Corporation Berhad disclosed an intangible asset as in their annual report for the year that concluded in 2021. The report covered the period of time from 2020 to 2021. The total amount of Rm94,800,000 has been declared as the value of the intangible assets for the purpose of the group's financial statement. All of the company subsidiaries are taken into consideration when calculating the total amount of intangible asset that included in the group financial statement. As we know that intangible asset need to recognize when it came to determine accuracy, both that the predict for future economic benefit and the cost will be recorded initially. According to the annual report for Sunway Berhad for the year that just ended 2021, there were investment properties and intangible assets that were reported. The diagram shows this information. In the consolidated financial statement for the group, the total amount for the intangible asset was Rm 56.8985 million. For particular sum of intangible asset for the group financial statement pertains to the entire group of subsidiaries, which include companies like Sunway Treasury Sdn Berhad and Sunway City Sdn Berhad. For the recognition, the intangible asset should be recognized when it can be determined with reasonable accuracy, both that the predicted future economic benefit associated to the asset are likely to follow to the company, and that the cost of asset can be determined with sufficient precision. For the measurement, the intangible is to be measured and recorded at the cost initially. The phrase initial cost refers to the amount of expenditures incurred beginning on the date that the intangible asset first met the recognized criteria. For finite and useful life, if another standard does not permit adding it to the carrying amount of another asset, amortization of an intangible asset having a finite life should be recognized in the profit or loss statement. For derecognition, intangible assets should be derecognized when they are being disposed of and when there are no anticipated future economic advantages from their use or disposal. This is the case when there is no longer a need to account for them. The difference between the net proceeds from the asset disposal, if any were realized, and the asset carrying amount is used to calculate the gain or loss that resulted from the derecognition of an intangible asset.
So now I will present a different MFRS and MPERS for investment property. So under transfer, MFRS transfer to from investment property when and only when there is change in use evidenced by first is commencement of owner occupation, second is commencement of development with a view to save, and the third is commencement of operating lease to another party. For the MPERS investment property under transfer from investment property to property, plant and equipment, if a reliable measure of fair value is no longer available without undue cost or effort, in bracket change in circumstances. Next is under measurement. Initial measurement for MFRS and MPERS is same, which is both are measured at cost on initial recognition and transaction cost should include. For the subsequent measurement in MFRS, an accounting policy choice to measure using either first is cost model and the second is fair value model, and the subsequent measurement under MPERS is measure at fair value at each reporting date with change in fair value recognized in profit or loss. So the disclosure for MFRS and MPERS under investment property is MFRS and investment property is derecognized on disposal or when the investment property is permanently withdrawn from use and no future economic benefits in bracket or service potential are expected from its disposal. For the MPERS, disclosure is not available. So now we will go to the difference between MFRS and MPERS in intangible asset, which is MFRS 138. So the first is recognition as an intangible asset. For the MFRS, it is likely that the assets predicted future economic advantage or service possibilities will be transferred to the entity. So for the MPERS recognition, the predicted future economic gains linked to the assets are most likely to flow to the entity. So I will give to the Jeff result to continue for the difference between MFRS and MPERS in intangible asset, MFRS 138. Thank you.
So next, I will talk about under measurement. Okay, for MFRS, the measurement for MFRS 138, unless there is no established market for those assets, if an intangible asset is valued using the revaluation model, all other assets in its class must be valued using the same methodology. Okay, but for the MPERS, the measurement is about the cost model. Okay, the last difference between MFRS and MPS in intangible asset, MFRS 138 is about disclosure. So, for the MFRS, a first-time adopter may choose to evaluate the intangible asset at its fair value on the date of transition and use that value as its considered cost at that time. But for MPS, a first-time adopter may choose to apply the presumed cost at the revaluation date from a previous GAAP evaluation of the impairment loss sometime before the date of transition. Okay, the last but not least, about the conclusion. In conclusion, we have what we have learned about the difference between MFRS 140 and MFRS 138. For MFRS 140, we know that only certain buildings that eligible to entitled as investment property. The standard also allow company to choose either using a fair value model or cost model. And for MFRS 138, an identifiable non-monetary asset without physical substance kept for use in the production or supply of products or service for rental to other or for administrative purpose according to the earlier version of IAS 38. So that's all from us. Thank you very much and Assalamualaikum.